Welcome to the coffee shop, everybody. This is your host and barista Eric, and in today's video I'm going to show you boss level trading divergences. That means you're going to see how to find a divergence and where to take your profit like no one has ever done. So like this video, subscribe to this channel, and if you want to see how to beat the boss level divergence trading master, stick around for this whole video, because the market, it actually told you where it's going to stop. Welcome to the coffee shop, everybody. This is your host and barista Eric, and I am here to yet again save the day. Yes, sit down here at the coffee shop and let's get into something very brisk, right? So there have been a number of divergence trading videos, lots of divergence strategies, okay? And I said it before in my own divergence trading strategy. Anyone can give you stage one, which is how to see the divergence. Great. I was able to do a video to show you how to actually trade the divergence, which is when do you enter the trade. Just because you see a divergence doesn't mean you can actually enter the trade right away. I gave you an example and a breakdown of when you're supposed to get into the trade. For example, if you see a bearish divergence after a bullish move, you're supposed to go short. When do you get into the short? That's what my previous video was about. Now I'm going to show you where do you set your take profits. Okay, so not only do I show you how to see a divergence, not only do I show you how to enter the divergence, when you're supposed to enter, and not only do I show you where you're going to take your profit, that you can just set your take profit and walk away. I'm going to do one more thing. I am going to give you the code for an indicator that you have missed. Okay, I'm just going to put it in the description below and you can get the code yourself. Okay. Make sure you like this video, make sure you subscribe to this channel, do the whole nine, because I'm going to be giving you a whole bunch of things. Now, there's an indicator that I did not create it. It's simply an example of an indicator. Okay, it's in the PineScript community, but a lot of you are not coders, so you may have missed this one. All right, so let me get into the readout of this particular indicator. Okay, and let me make sure my screen is good. Yeah, there we are. Okay, cool. Let's get into this. So this is based off the 1028 moving, the 1028 strategy. We're going to use that. We're going to apply it to a divergence trading strategy. And I'm going to give you guys like some really awesome move that's going to get you visibility on divergence, trade into the divergence, get out of the trade. Where is like far enough? Like how far will this price move? That's how far you'll go. You could get out anywhere before that level. So here's a write-up, okay? And by the way, I call this my boss divergence with final boss take profit. Why? Because this is using the strategy of trading divergences like a boss, right? But also the final boss is where you take your profits. You're going to beat the final boss. You will get all the way to the end and exit with profit. So there is an indicator that's in the description below. It is not on TradingView. It's in the description below. There's a link to the idea for it, but the code is below. All right. This is a simple triple set of moving averages, smooth moving averages that you can use in the 1028 strategy. Among themselves, there is nothing special about them, but because of their settings, they will help you find entries for divergence trading, as well as give you the ability to look backwards in price, in price action to find exits for your divergence trade. Find the exit, okay? These moving averages have conditional colors, by the way, built into the code. All three are green, okay, when they're lined up in a bullish form and price action is above them. All three are red when they're bearish, when they're below each other, and price action is below them, okay? And otherwise they're colored gray when price action and the moving averages are mixed up in any way, okay? If price action or the moving averages, if they're mixed up in any way, they just change to gray. That's all right? And yeah, like I was saying before, the code for this particular indicator is completely free and public. It's in the PineScript community. But since, okay, this is the kicker, Since the study page for this particular example has no method or strategy to use it, it is simply giving you the code and it tells you what the code does. But on that web page, it doesn't tell you how to use it and it does not apply it to any strategies. So I've adjusted the inputs and the code just a little bit, just so that you can apply it to a divergence trading strategy. So here's the code below. Look down below. And feel free to contact me if you are unsure on how to add it to your PineScript editor window, like in here, okay? If you're unsure on how to add it in there, I'll be more than happy to give you a hand. Just contact me directly, whatever the case may be. You can get me on TradingView. You already know my username. I'll put that in the link below. All right, so you got two things in the description. You got the code for the indicator and how to get in touch with me. Also, in this video, I'm going to show you how to use this. So let's get into it, right? What else do you need here? Well, first you need this trending SMA. It says EMA here, don't worry. You need the trending SMA indicator, which is in the description below. And you need an RSI. I'm using the honey chai with everything turned off. If you want the link to this, that's also in the description. You can also use any RSI. You can the Heiken Ashi algo, whatever you want. You just need something to show you an RSI divergence. So let's do this. Let me move this out of the way and let's find a divergence. By the way, let me just show you the indicator real quick here. Okay, trending, it says EMA, don't worry. Trending SMAs, you got a 10, a 28, and a 50. All right, now the 10 is the fast one, then the 28 is the medium one, and the slow one is the 50. This is just your overall trend, but these two are the ones that you want to watch where things happen. Okay, so here, let's find a divergence, right? We want a nice high on the RSIs right here. You got a high. What I'm going to do is this. So this should help you out. Take a flat line and just draw it across. Okay. Do the same thing on your RSI right there. Okay. Now I'm doing this on a 1 minute chart. This strategy works all the way to the 1 hour chart. Okay. So draw a line straight across. If price breaks this level, but the RSI is nowhere near this level, you have a divergence. That means your RSI is low and your price is high. Okay. So let's see how this plays out. I got one high right there. Lay it out. I'm looking at the price. I see price here. Here we go. Price has broken above it right at this point. Okay. Let's see. Do I get another high? Yes, I do. I get another high. So here is my high on my price. But here is that same level on the RSI. Obviously a divergence. So now let's walk through the steps. You have found your divergence. What's the step? Find the candle that got you into your divergence and draw a box around it plus the divergence, the beginning and the end of the divergence. So I don't need this anymore. Take your box, go from the open of this candle to the close of this candle. That's your divergence. This is the start of your divergence. This is essentially a support and resistance zone. This is a key level, right? You want to make sure that you close below this level. You have to close below that level before you can enter your short trade. So while you're waiting for price action to play out and get there, you need to go and look for your take profit. This is the final boss. Okay. Look at your 10 period moving average. Follow it backwards. You have to follow it until you find a wick that has crossed through it, but the candle body never touched it. So here's an example. Here's a candle body. Here's a wick. Okay. And this is a moving average. Notice how the candle closes, but it does not touch the moving average. It just closes up like this. So you either have this or you have this, but you never have this. Okay. You cannot have the wick, right, and the candle close on one side of the moving average. They have to be on alternate sides. The wick is the only thing that can go through the moving average. You're looking at the 10 period moving average. Follow it backwards until you see a wick go through it, right? Here, this one doesn't go through it. This one goes through, but the open of the candle is actually below the moving average. So these two are not it. Here, just the 10. I'm not looking at the other two, just looking at the 10, right? It's this one here. This wick goes through it. So I'm going to draw a box around this right here. I'm gonna draw that zone, drag that zone out to wherever it goes. Now I have my zone that I need to break. It literally takes you seconds to do this, okay? I know I'm taking a long time to do it, but I want to be very descriptive with it, right? So you draw this zone out here. This is how far you're going. That's it. So you want to enter from this level. You want to exit at that level. The whole time that you were looking for this, price action is playing out. You're waiting for it to do what it does. Do not enter your trade until you break this zone, right? See how it immediately pushes back away from that zone? There you go. Still not there. Still not there. There we go. Here's your entry. Why do you wait for this? Because you need the market to give you a new swing high that it doesn't need to go to here. So you enter here, right? Here's the new swing high, right? In a right place. And then you have your entry below that zone and you already found your take profit zone. I'm just gonna go right to the top of that zone. That's it. So let's let this play out, right? Drag this out, go over here, play it out. Now I set my take profit, I set my trade, and I walked away from the chart because I know where it's supposed to get out. That's it. Again, here's the recap, right? Let's wipe all this out. You find your divergence, okay? Look for it on your RSI. Here's your divergence, okay? Draw a box around the open of this candle to the close of this candle. Drag it out. While you're waiting for price to break below this channel, right? Because you're actually here. You found your divergence, and this is where you are right now. You're waiting for price to get below this. Follow your 10 backwards until you find a wick that crosses through it. It's right here. This is your 10. That's the wick going through it. The candle body is not touching. Go right here, high to low. Drag that out. Now, if you're really risky, you could set a stop limit order there. So when price reaches it, it triggers your short trade and your take profit is already down here. So no matter what, no matter how you trade, your take profit, you always know where it is. So let price play out. Enter for your short. You broke through the zone, right? And then again, just let it play out and you'll end up getting your trade done. Walk away, go live life. And on a 1 minute chart, this is a 1 to 1.5, right? Oh, actually, there. This is a 1 to 1.86. It's almost a 1 to 2. And you end up gaining a nice percent. This is a $2 move that you end up catching the entire move on. A divergence trade with final boss level exits, okay? You want to find that wick that crossed through your 10 period moving average. Peace out, everybody. See you next time at the coffee shop.